Welcome back. For today's explainer, we are breaking down the entire weekly trading plan for Nifty and Gold for the week of September 22nd. We're going to dive deep into the key levels, what the sentiment is telling us, and the core strategies you really need to be watching. All right, let's get right into it.
The big question hanging over the market this week is pretty simple. Are the recent moves we're seeing in Nifty and Gold a genuine, sustainable breakout, or are we about to get caught in a fake out? Both of them are sitting at these absolutely critical inflection points, and what happens this week could really set the tone for the rest of the month.
So, to figure that out, here is how we're going to walk through it. First, we'll start with the opening bell to really set the scene. Then, we'll build a complete weekly blueprint for Nifty. After that, we'll get into gold and its tricky relationship with the dollar. Then we'll map out the key scenarios to watch for. And finally, we'll wrap it all up with a solid, actionable game plan. Okay, first up, the market's opening bell. Before we can even think about looking forward, we have to understand where we're coming from and what major global forces are at play right now.
So last week, Nifty really tried to break free from its range. It showed some genuine strength. Meanwhile, gold looked pretty bullish, but ultimately it just stayed in what we call a rotational pattern. That just means it made new highs but couldn't hold them. It just kept getting pulled back down. Honestly, both are like coiled springs, just waiting to make a bigger move. And the catalyst for that move? Well, it could come from any one of these global cues. The big one, for sure, is the FOMC minutes, because that'll give us hints on future interest rates. But we also need to keep a super close eye on the dollar index, jobless claims to get a read on the economy's health, and of course, our very own India VIX for any signs of rising fear in the market. All right, let's build our Nifty weekly blueprint. This is where we'll break down the most critical price zones and data points you need to know. Think of this slide as the battlefield for the week. The bulls have drawn their line in the sand right here at major support, 25,250. On the other side, the bears have built a massive wall of resistance between 25,550 and 25,600. And smack dab in the middle, you've got this max pain zone, which often acts like a magnet for the price, especially when the market is quiet. So here's the crucial point, the main takeaway. The overall bias is still positive, but, and this is a big but, it's completely dependent on that 25,250 support level. If that level holds, the bulls are still in control. If it breaks, well, the whole picture changes and fast. Another key idea you've got to watch is the VWAP, or the volume-weighted average price. The easiest way to think about it is like the market's center of gravity. When there's no strong trend, the price just tends to get pulled right back to this level, which for Nifty is currently sitting around 25,375. Now, this is where it gets really interesting. The VIX. Right now, we are in a very, very low volatility state, around 10. This creates a super tricky environment where big moves can just fizzle out, making it much better for scalping, taking quick, small profits, instead of chasing those big trends. But if that VIX starts creeping up above 11, especially if support breaks, you gotta watch out for sudden, panicky moves. And this chart just illustrates the current positioning perfectly. You can see the big institutions, both foreign and domestic, are net buyers. But look at the pro traders. They're playing range. They're buying futures, but they're also selling call options, which is basically them betting that the upside is capped for now. This really reinforces that whole balanced to bullish view we talked about. Okay, let's switch gears and move on to gold. Now, for gold, the story isn't just about its own chart. It's really about taking a long look at the US dollar's shadow, because that's where the clues are. If you remember just one number for gold this week, please make it this one, 3610. This isn't just some random level. It's the monthly VWAP. It's a massive reference point for the big institutional players, and honestly, it's the pivot around which the entire week could turn. And to really understand why 3610 is so important, you have to look at the dollar index, or DXY. It's simple. A stronger dollar makes gold more expensive in other currencies, which puts pressure on its price. Right now, the DXY is just stuck in this tight little box between 97.40 and 97.85. Whichever way it breaks out will likely determine gold's next big move. So this breaks it down into a really simple if-then scenario. If the DXY pushes up towards 98, gold is going to face pressure. If the DXY breaks below 97.40, gold gets a green light to rally. And if the dollar just stays stuck in its range, well, gold will probably continue its rotational dance, just bouncing between its own key levels. And here are those key levels for gold. You can see everything revolves around that 3610 pivot. If it breaks below, you're risking a much deeper slide. But if it holds, the path towards that resistance at 3707 and even higher starts to open up. That immediate support zone from Friday's trading, that's going to be the first big test for the buyers. Okay, so now that we've got all the key levels, let's connect the dots and map out the most likely bullish and bearish scenarios for the week ahead. For Nifty, it's actually pretty straightforward. The bullish case is simple. As long as 25,250 holds, the path of least resistance is up towards that 25,550 resistance zone. The bearish case, that gets triggered on a decisive break of 25,250, which could cause a lot of long positions to unwind and lead to a pretty quick slide. Now, gold scenarios are a little more, let's say, nuanced. The bullish case actually has two triggers, either a sharp dip below 3610 that quickly reverses, that's a classic liquidity trap designed to catch weak sellers, or a clean break and hold above its recent highs. The bearish case, though, requires a perfect storm. You need gold to break below 3610, and you need the dollar index to break above 98. If you get that combination, it could trigger a much, much deeper sell-off. So, how do we actually trade all this? Let's put everything together into a clear game plan with some core principles to help you navigate the week. First things first, mark your calendar. These are the major dollar-driven events this week. The FOMC minutes on Wednesday evening are the main event, and they have the potential to inject massive two-sided volatility into the markets, so you got to be ready for it. And finally, listen, regardless of which scenario plays out, these principles are absolutely non-negotiable. Don't go chasing a move that's already happened. Wait for confirmation at the key levels we've talked about. And please, know your exit before you even enter by always using a defined stop loss. Be nimble, especially around news. That's when discipline matters most. These rules are your best defense in any market. So, there you have it. The levels are mapped out, the scenarios are clear. The only question left is how are you going to execute your plan when the market starts to move? Are you going to let volatility be your friend or your foe? Trade safe, and we'll see you next time.